Do you want to be ahead of the game for the latest in arts, music, cuisine, and entertainment across the Middle East's most dynamic capital cities? Al Monitor is proud to launch our City Pulse newsletters, focused exclusively on local news, starting in Riyadh, Dubai, Istanbul, and Doha. Each week, our on-the-ground writers in these cities cover the latest cultural happenings and trends, so you have everything you need to know for the best local experiences. To subscribe for free, go to almonitor.com, that's al-monitor.com, and sign up on our newsletter page.
Welcome back to the Al Monitor Brief. I'm Adam Lucente. A regulatory filing this week revealed that a number of partners are supporting Paramount Skydance Corporation's $108 billion bid to complete a hostile takeover of Warner Bros. Discovery Incorporated. This comes after Netflix announced late last week that it had secured a $72 billion deal for Warner Bros.' TV, film studio, and streaming assets. Now, this is a big story for U.S. television, but a closer look reveals that this bid has a lot to do with the Middle East as well. Affinity Partners, the investment firm of President Donald Trump's son-in-law, Jared Kushner, is listed as one of the backers of this bid. Affinity, of course, is heavily supported by Gulf sovereign funds, including Saudi Arabia's Public Investment Fund. The PIF is itself one of the backers of the Paramount bid, as are the Qatar Investment Authority and Ahmed Holding Company, an Emirati state-owned firm. In this episode, we'll hear from Al Monitor's chief business correspondent, Jack Dutton. Jack takes us through what the bid says about the potential for the Gulf to invest further in U.S. entertainment, why Trump may view investment from the region as strategically valuable in the current global climate, and what the participation of firms from Saudi Arabia, Qatar, and the UAE in Paramount's plan says about the economic competition in the Middle East. Hope you enjoy. Jack, welcome back to the Al Monitor Brief.
Great to be back on the pod, Adam.
So, Jack, I want to first get into what's next with this potential deal. I mean, if this Paramount Skydance Corporation's bid to take over Warner Bros. Discovery Inc. goes through with these Gulf investors involved, how deep could Gulf penetration into the U.S. entertainment sector go, in your view?
Well, can I just say this is quite a remarkable deal, and this is obviously a bid for one of the TV and entertainment industry's most prized American assets, so Warner Bros. Discovery, which includes streaming services like HBO and DC Comics. And it's crazy the kind of level of turnaround we had on Friday, with Netflix seemingly coming in, getting the approval of the board to green light the deal, and then a hostile takeover on Sunday led by Paramount Skydance, and it's like something out of the HBO show Succession. And I was reading that the CEO's father, Larry Ellison, who's the second richest man in the world, even called Donald Trump to talk about this deal and say that this deal would be bad for competition. So this has really thrown a spanner in the works for Netflix. And there's still a lot of question marks over whether this deal will go through. The new bid of $108 billion from Paramount Skydance is all cash, unlike the Netflix deal, which is not covering the entire company and is a mixture of shares and cash. So it's there's quite a lot of question marks, really. So it's a hostile takeover bid, which means it was made without the permission of the board, and Paramount went directly to the shareholders at $30 a share. And that means it kind of depends on whether the shareholders are going to accept the offer instead. And as Netflix has already struck this deal with Warner Brothers, an $82.7 billion deal, and which has been backed, this move by Paramount directly challenges that. And it will depend on the regulatory environment and how long that goes on for. But this deal now is meaning that this whole saga, which seemed like it had concluded on Friday, is going to go on for many more weeks and even months. For instance, Netflix's deal could face more antitrust and regulatory scrutiny by combining these two major streaming services to make Netflix larger and increase its dominance. And Paramount has been catching up with the likes of Netflix and Apple, which have been dominating in this segment. You've also got these hefty breakup fees as well. I think Netflix would have to pay if Warner Brothers backed out the deal with Netflix, I think they would have to pay around 3 billion or 2.8 billion to Netflix, and Netflix would have to pay an even bigger fee of 5.8 billion if the deal was blocked or is terminated for regulatory reasons. So Paramount could actually win here. They could gain the shareholder support, and if the antitrust regulators slow down or block the Netflix deal, it's a much easier and cleaner path for Paramount. And also, there's a lot of sway as well. I guess the Ellisons have a lot of sway in Washington and Donald Trump. And in terms of whether we're going to see more golf penetration into the US entertainment industry, I think we are going to see more, especially when you look at Affinity Partners is involved in this deal, which is run by and founded by the President Donald Trump's son-in-law, Jared Kushner, and he's got a track record of doing deals with different Gulf entities, including sovereign wealth funds. And the Gulf economies are trying to diversify away from oil, and entertainment is a lucrative sector. So it makes sense that they'll be looking across the Atlantic for opportunities. And Warner Brothers Discovery represents a significant opportunity.
We've seen some deals involving the Gulf kind of slow down. I'm thinking specifically about Live Golf PGA Tour merger, which was announced then hasn't happened. And you mentioned the regulatory environment, and I think that's a key point. I mean, how do you think the Trump administration is looking at the Gulf involvement aspect in this bid? And like you said, Ellison has some friends in Washington. What benefit might the president see in the region taking a stake in Warner Brothers Discovery?
The Gulf funds I was reading in the Warner Brothers deal will be providing $24 billion of financing, which is a significant amount. And it's also those funds, so Limad Holding, which is tied to the UAE sovereign wealth funds, quite obscure company with not a public track record of deal making, but obviously tied to the UAE state and sovereign wealth funds. So they will be providing some of the financing along with the Saudi Public Investment Fund and the Qatar Investment Authority. And as part of these three sovereign wealth funds, along with affinity partners who are financing the deal, won't have the governance rights when if the takeover was to go through. So that means that they're not going to have a place on the board, or they're not going to have like the controlling stake in the company. Is going to be the investment only, and it will be the Ellisons, David Ellison principally, and a company called Redbird IMI, which is a New York private equity firm. They will have control, so they will have members of their company on the board, and Redbird as well has got lots of interesting links to the Middle East. For instance, Sheikh Mansour, the vice president of the UAE, is actually one of the main financial backers of Redbird IMI. So for Trump, it shows it's another opportunity. As I mentioned before, Affinity Partners has a history of working with Gulf partners. Some of its investors include the Abu Dhabi fund Lunate, the PIF, which came in with a significant 2 billion investment into Affinity Partners, and the QIA, Qatar Investment Authority. And overall, they've invested nearly $5 billion into Affinity Partners. Also, there's the crypto play as well. So the World Liberty Financial, which is the cryptocurrency company founded by the Trump organization, has Gulf investment too from Abu Dhabi backed fund at MGX. And a lot of these Gulf countries are flush with oil wealth and are looking to diversify their economies into entertainment, tourism, gaming, and other sectors. And Trump might see this as a way of keeping some of these countries happy to get in on the action, so to speak, like with the entertainment industry and one of the major deals. And it helps these countries achieve some of their economic diversity plans. And let's not forget Trump's first official visit, both terms as US president, was to the Gulf. And when he went to the Gulf, he raised billions of dollars investment pledges. So it's a way of deepening ties with these Gulf states, and is also benefiting affinity partners and World Liberty and other businesses which are affiliated with the Trump organization.
Stepping back and looking a bit at the political dynamics here, we cover the UAE-Saudi rivalry a lot, currently playing out most prominently in Yemen. But in this bid, we have Emirati, Qatari, and Saudi firms participating in the hostile takeover effort. Does the fact that you have Saudi, Qatari, and Emirati firms all being part of this indicate any sort of strategic unity among Gulf states regarding U.S. investments, or do you look at this more as a competition between them?
I think I would say this is more unity than a competition, but there's elements of both. So while these sovereign wealth funds compete on some deals, you have the bilateral rivalries between the likes of UAE and Saudi Arabia and also Qatar. Let's not forget there was past tensions, the Gulf blockade of Qatar for supporting Islamist movements such as the Muslim Brotherhood from 2017 to 2021, and there's differences in foreign policy. In this sense, I think there's unity because these funds often club together on big transactions and share a geopolitical interest in the US. And as I mentioned earlier, they believe it represents a significant opportunity for them to diversify their economies away from oil. Furthermore, there's a lot of this deal. If you were to compare when you look at the nuts and bolts of this deal, and as I mentioned, these Middle Eastern sovereign wealth funds have not agreed to take any controlling role. So that means there's less scrutiny from the Committee of Foreign Investment in the US, CFIUS, which is basically the committee which scrutinizes foreign investment deals in the US to ensure that there's no influences which could not serve, which could go against Washington's interests. So we've seen CFIUS come up a lot with the sale of super sensitive advanced AI chips from NVIDIA to the UAE and other Middle Eastern countries, because the reason why CFIUS have made this hard for these chips to be sold to these countries in bulk until recently is because of concerns that China might get their hands on the sensitive technology and therefore edge forward in the global AI race against the US. And one other thing I wanted to mention is the Trump administration is becoming increasingly hardline on allies, be that Gulf states and Europe. And it was very evident in Trump's recent national security strategy released a couple of days ago, which has a much more hardline approach to historic allies and basically implores them to kind of choose between them and China. And we've seen that with the UAE on the AI front. The UAE has had to adopt US technology over China's for the US to try and outcompete China in this AI race.
The Gulf is obviously interested in a lot of sectors, ranging from sports to more sensitive technologies, as you mentioned. Is investing in U.S. entertainment a good bet for these Gulf entities in their quest to move away from oil? Why or why not?
In recent years, we've really seen some of these sovereign wealth funds in the Gulf become the inverted commas bankers of the world. And collectively, 5 sovereign wealth funds controlled by Abu Dhabi, Qatar, and Saudi Arabia deployed $82 billion last year, which is more than 60% of all sovereign wealth fund investments, according to Global SWF, an organization which monitors these investments. And television is a burgeoning industry, and so is sports, especially in the US. The US entertainment industry is massive. It's valued around $700 billion last year, making it the world's largest entertainment market, and projections is that it will hit over 800 billion by 2028, driven especially by a rise in streaming, gaming, film, and digital content as more traditional methods of watching entertainment go out the window, and there's an increase in uptick in some of the newer methods. Also, it's not the first time Middle Eastern sovereign wealth funds have clubbed together with affinity on large takeovers. In September, Affinity Partners with the Saudi PIF and a California-based media-focused investment firm called Silver Lake announced that they agreed to buy gaming industry giant Electronic Arts in a $55 billion deal, which I believe was the largest leveraged buyout in history. So a leveraged buyout being financed by debt. And also that same month, although this is not a US group, we saw the Saudi PIF buy a majority stake in NBC Group, which is a major broadcaster in the Middle East. I believe Saudi-based, and it has 13 TV channels and a streaming platform, and called Shahid, which is often kind of called the Netflix of the Middle East. And there's a lot of partnerships, content licenses with US companies. NBC has, so that's just deepening the kind of Gulf capital flowing into Western media the Western media and entertainment industry. We also we've also seen the All Woman Sports Network, which is California-based network founded by Hollywood actor Whoopi Goldberg. Is about to launch, was launched in Saudi Arabia, and the full network is going to launch later this month. I spoke with the CEO, George Chung, a few weeks ago, and he sees it being a multi-million-dollar business very quickly, and it's opening up new markets in the kingdom, such as female sports apparel and lots of different events. And it's a very lucrative opportunity for the kingdom and to draw more kind of tourists and sports spectators rather than like making all its money off energy and oil.
Jack, this is a complex issue that you summed up well. Thanks a lot for your time, and we look forward to more of your reporting on this topic.
Thank you, Adam.
Thanks for listening to the Al Monitor Brief. Be sure to follow Al Monitor for more on the stories impacting the Middle East. Until next time, I'm Adam Lucente.